Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel here on YouTube. Thanks so much for joining me in today's video. We're going to be talking about an interesting topic. Is this current price action that we're seeing right over here, is this going to be like what we saw in 2019 where Bitcoin breaks out and enjoys a strong relief rally as part of macro accumulation before that final massive bull market that we have after the halving? So let's dive into today's video. Subscribe to the channel for more videos like this in the future, and of course like the video if you like these sort of topics to be explored here on the channel. So very interestingly, let's focus first on two things, and let's start off with this current market structure being very similar to this current market structure. I mean, it's very small in this current cycle compared to this, but nonetheless higher lows and a ascending triangle breakout, ascending triangle lasting multiple weeks and breakout, ascending triangle lasting multiple weeks and then the breakout. So are these comparable market structure wise and time wise? They are comparable, and they're comparable also in the breakout rally that we saw get generated from that ascending triangle, 27% and 21%. So that's a weekly candle that's very similar to the breakout weekly candle in the 2019 cycle to end that bear market. So really interesting similarities, not only market structure wise but also rally wise in a single weekly candle. That's really interesting to see play out. But is this really 2019? And one of the things to really take note of before we answer that question is that this 2015 accumulation range at the bottom of the 2014 bear market, this accumulation range formed a sideways range and essentially a double bottom with capitulation in the form of this downside wick. Many people were comparing this current cycle to 2015, and in a sense it was sensible to do that in terms of time and the amount of consolidation that we saw. But you can see that this is a very different consolidation. This is a downtrending channel of consolidation, whereas this was a sideways accumulation range where double bottoming happened, and essentially bottoming at a very distinctive range low here. You can see that bottoming occurs multiple times, this and this being those major bottoms in that accumulation range, whereas here you didn't see any downtrending, or at least any double bottoming. You saw a downtrending channel, lower lows essentially happening, while the monthly RSI showcases higher lows. So very different. This isn't a sideways range, but nonetheless very differing aspects here, technical aspects, but nonetheless time-wise comparable. Sensible to suggest that 2015 is like this current cycle in terms of that macro accumulation range time-wise, but structure-wise very different. So that brings me to my next point, that if this is 2019 and we're supposed to see a 2019 repeat, then it's going to be probably different, because history rhymes. It doesn't truly repeat itself, and as someone who is a technical analyst and loves to see history repeating itself, historical price tendencies tend to manifest. What we've seen in the past tends to manifest also in the future, but it's never quite picture perfect. And we can see this accumulation range being very different to this accumulation range, and this sort of June 19 peak and then March 2020 retest, that's going to be probably different to what we see in this cycle, but nonetheless we're going to see history rhyme. So that's kind of a preface to what we're going to be talking about here. So in the 2019 accumulation cycle, because we didn't see a new breakout to new all-time highs. In fact, if we focus on this chart here, we saw a lower high form here. So this sort of technical principle I'd probably see occur once again. However Bitcoin behaves going forward, that lower high is pretty much crucial to just suggest to us that that would be macro reaccumulation. And one of the scenarios I want to talk about in today's video is how this ascending triangle broke out into a massive weekly candle, shot up to not all-time highs, but a lower high, and then downtrending before successfully retesting this previous accumulation range, right? So breakout, pullback, retest, and then upside continuation. And, you know, some people might say to me, listen, it's interesting to just hear this after the fact, coming up with theories after the fact. But one of the things that we need to really take into account is that this is an after the fact rationalization from me. March 2020, mid-March 2020, I spoke about how what if this latest COVID-based capitulation was merely a macro pullback following the ascending triangle breakout, and for Bitcoin to just pull back, retest before continuing its trend. And of course, we know what happened later. Many months later, we saw new all-time highs into 69K. So that sort of breakout, pullback, retest attempt, and then trend continuation, that was a pretty solid assertion, and one that we could see repeat going forward. So that's something to get excited about potentially. History rhymes. It doesn't picture perfect repeat itself, but there is a lot of evidence to suggest that we could see something like that. No need to really talk about targets for that move, but we do have some resistance here, whether that's 40, whether that's 50. Nonetheless, we need to see that lower high, apologies, take place, just like we saw here. Lower high, and relative to this high, we're going to see something like that. So first and foremost, breakout, pullback, retest, and then trend continuation. I can see that happening, much like we saw breakout, pullback, retest, and then new all-time highs afterwards. So that would essentially give us an idea that, well, hey, we're going to probably see 18, 17, 16K next year, 2024. So breaking out and then pulling back for that retest, we could see that. And this isn't just an assertion based on what we've seen in 2019 and this call that I made back then, which is a strong argument supporting this sort of potential play out going forward. But the 4-year cycle is pretty interesting in suggesting to us that we could see some sort of rally to a local or rather macro lower high, pullback, and retest into this breakout region, if indeed this is the bottom. That's a huge assumption to make. If indeed this is the bottom, that's the assumption we need to really stress here, because if we do see a new bottom, then still this sort of scenario could take place, but at much lower levels. And the 4-year cycle really kind of suggests to us that this could be the bottom, and I'm going to explain to you why. So in any case, this sort of path could play out. And I spoke about this on Twitter in my 4-year cycle thread, so feel free to check that out if you haven't. It's in my pinned tweet. But this is a 4-year cycle playing out, right? And when we see a bottoming out candle, we then see candle 4 play out. And then if we see a bottoming out candle, candle 3, we see candle 4 play out. And that's what I want to just focus on this second half of the cycle. 1 and 2 being half of the 4-year cycle, and 3 and 4 being the other half of the 4-year cycle. So the top of candle 3, we see a downside wick in candle 4. The top of candle 3, we see a downside wick into candle 4, and in fact this downside wick almost touches the yearly open of candle 3. Narrowly misses it, as you can see, it narrowly misses that level. The bottom of candle 3 is narrowly missed by that downside wick in candle 4. So we have this candle bodied bottom for candle 3, and so candle number 4 would form somewhere here, but downside wicking taking place towards this level but not actually touching it. And the candle bodied candle 3 bottom was at around 17k. So in a nutshell, in candle 4, so 2024, we could see a downside wick towards 17k based on these historical principles in the 4-year cycle. Isn't that fascinating? So essentially, these green areas give us an idea that these are macro bottoming areas for the 4-year cycle, and these bottoms develop at the bottom of candle number 2, where the bear market ends. So we just have to ask ourselves, will we see a minus 10% downside wick like we saw in candle number 3 of 2019, or a 50% downside wick of candle 3 in 2015? Either way, any downside wicking is probably going to be that financial, that peak maximum financial opportunity where peak pessimism and fear are in the forefront of the collective consciousness of market participants. Peak financial opportunity in this green area, but could we see that? Candle 3 is where we see upside wicking and downside wicking, upside wicking and downside wicking. So upside wicking and downside wicking could still take place. So really important to just bear in mind that candle 3 in this cycle is probably going to end the year at higher prices than we're seeing right now. I don't know, maybe 32k, 30k, 25k, whatever the case may be. But then we're going to see a downside wick like in candle 4 into the candle 3 open. Just to successfully retest this candle 3 area via a candle 4 retest before rallying to possibly new all-time highs in 2024, because in candle 4 in 2016 didn't see new all-time highs, but we saw that in 2020. So earliest 2024, late 2024 all-time highs, or at the latest 2025 candle 1. In any case, that was my analysis on whether this is 2019 like price action, this 2023. Many signs are showing that could indeed be the case, but it's not going to play out exactly how we think it will play out. But this sort of scenario of a retest attempt, well, it's supported by the 4-year cycle theory, where we might still see 17, 18, 16k in 2024. So much to look forward to, much to get excited about. If you enjoyed this video, subscribe to the channel, like the video. And just before we close, I just want to announce that I'm going to be doing a 30-minute deep dive exclusive for members of the Rekt Capital newsletter. It's going to be awesome. We're going to be talking about a lot more interesting observations. So if you loved this video, I'm sure you'll love the deep dive, which is coming to you next Tuesday, exclusive for members, valued members of the Rekt Capital newsletter. Feel free to sign up in the link in the description down below. Feel free to upgrade your subscription to just get that 30-minute deep dive, which is going to be something that will truly prove to be a valuable resource going forward. So if you like this video, you'll love that deep dive. Feel free to sign up in the link in the description down below. That's about it for today's video. Thanks so much for watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.